Hey guys, there's another epic week of backtesting of just the previous week which has happened. Much bigger result than what I was expecting considering what I took out the market despite having a good week myself. Well worth sticking around. Because there wasn't much to do for about 2 days in the market, I go into quite a lot of detail on the strategy itself, which you might find helpful. So stick around, watch the whole video. There's a lot of value in here. And if you want to join me, links below. Cheers. All right, guys, welcome back to another week's worth of backtesting. As always, what we'll do is we will go through the rules first, and I will take you through what's happened in this previous week. Don't worry about seeing, a preview of the charts. I've literally just traded them, so I do remember bits of it, but I try not to take things with prejudice or with my experience. Try to just stick to the plan exact and show you exactly what the strategy is capable of. So first of all, the rules. If you're new to the channel, this will be helpful. If you're not new to the channel, maybe skip the next couple of minutes. But all what we do essentially is trade zone to zone. All right, so it's really simple. We're gonna pretend, I do this exact example every time, but we're gonna pretend that these are H4 zones, okay? So it could be supply or demand, it could be just a general point of interest, it could be order blocks. There's a series of things that we trade, but mostly we're looking for areas of interest, okay? Somewhere where price might bounce from. We're not looking for necessarily reversals in the whole market, we're just looking for places to get involved. So let's just use an example where price is working its way down and it's got involved in this middle POI, okay? This red line is going to represent the 15-minute. So the 15-minute candles, these blue ones are going to represent the H4. So that's two time frames which work really, really well together. Much like the 5-minute and the 1 hour, or the 4 hour and the weekly, or the 1 minute and the 15-minute. So it depends what type of trader you are. You can use any sort of those two time frames to make it fit around your schedule and your plan. And I have traded all of them and traded all of them successfully. Just the 15-minute and 4 hour fits well with my lifestyle at the moment. So we're just gonna pretend that price is, it's in the middle. It's within a POI at the moment. What we want essentially is to look for one of two patterns. Before I do the rest of that, let's do the patterns. There's a continuation pattern, which happens about 2/3 of the time, which is literally just that. Or, if you're going the other way, it's just, a breaker structure on the downside. But we call this boss. And the reason for that is you get a breaker structure. All right, you have a push up, a pull back, and then another push up. And as soon as you got a break, preferably with a body, so a body close above this previous swing high, you call that a break of structure. It's a boss. It's a trend continuation. So it can close there and it can keep going however far. We never know how far it's really going to go. And then all what we do is we start monitoring the pullback. We try to get involved with either an order block or a demand zone in an upward trend and try to get involved in the market that way. Alternatively, what there is a reversal pattern which we use. There's a couple of reversal patterns that we do use, but the primary one is chock. So similar to a boss, you're going to have the same structure happen. Okay, so you're going to have a break to the downside, so boss to occur here. And then instead of price pulling back and continuing on its journey down, we're going to actually get a break of the structure prior. Okay, so instead of pressing down, it's actually going to break up in this instance. Then what we try to do is we try to find an order block on this previous leg. So preferably an order block if we can get it. There's a few rules around order blocks, the ones which I use, the ones which I look for these days, which have a little bit more strength behind them. But I try to get one as deep as I can if possible, get involved, and then work the market back up. And same again, just flip it upside down if you want to look at the opposite pattern. They've got good success rates, boss and chock. They've got a lot of statistics behind them. And if they're used in the correct areas of the chart, which I've figured out, it's an extremely powerful strategy. Now, the reason why I use the H4 as my points of interest is that I used to use the daily. So I used to set targets like this. I'd break out of a zone. Ooh, that's small. Break out of a zone, target up to the next area. And I'd get literally like 1R, 1.5R, sometimes 3 if I was lucky, maybe 6 at the best. And that was generally my trade plan. It was really, really simple. Until one day I realized, well, I know where the market's going. Like, it's fairly easy to spot where the market's gonna go, especially when you use this strategy. Why don't I try to get involved, with a smaller stop loss. So smaller stop loss, just be a little bit more precise with my entry, still target the same place, but drastically increase my risk reward ratio. So that's where I started working on all sorts of different things. It took about 2 or 3 years to piece it together, but here we are. So I'm going to run through the generalized rules with you. Okay, so with this, we're going to pretend that the market is generally trending down, but there's a point of interest above, point of interest below, and we've just tapped into a point of interest. What we are looking for is basically a price reaction. Okay, I don't want to predict, like we can predict where it's going to go with a quite a heavy degree of accuracy, but we want to not predict what's going to happen. We just watch and we see what it gives us. All right, so let's say, for example, that price pulls back a little bit and then it breaks out of this area. Okay, it doesn't necessarily have to break out of the H4. It's ideal if it does, but preferably with a body. Come back, get involved in an order block and work its way down. It's rarely ever straight down. You know, it can do all sorts of kind of things in this, like in the middle of the range. And if you trade in the middle of a range, you need to know what you're doing because you will get chopped up a lot of the time. And then once we've got down to here, we're either looking for, you know, a continuation and just copy what we did before down to the next point of interest, or we can get a reversal pattern and try and work our way back up to another zone, which would be another H4 zone, which may not be this one. It could be, you know, the H4 zones move with price as the chart evolves. So what we do is we just target the base of that and take our profits. And it's kind of as simple as that. So we're going to go over the previous week, okay? So don't worry that I'm going to reveal the charts, doesn't matter. I've literally just traded it. I've closed up what we had last week. If you haven't seen that video, it's worth a watch. This is what we got last week. It was it was a really good week. But we started off with this as an order block. But I also identified something as well in the evening. I'll do the bar replay so we can go through with a little bit of, you know, realistic simulation. We'll actually go back to the start of the week so I can look at the weekly, look at the daily with you. But first of all, before we do any of the actual trading, we need to try to figure out what direction the market's going in. So the previous week, we were looking, you know, the weekly time frame was going down, the daily was going down, the H4 was going down. I always check at the start of the week, and preferably at the start of every session that I decide to trade, what is the market doing? Am I missing any supply zones, any demand zones, any points of interest, order blocks, etc.? And what we had here, you know, for the weekly was the potential for that, you know, so the previous week of last week as, you know, a potential weekly area to get involved with, because it looks as though that the market would need to come up and rebalance before it can aggressively pull away again. Now, I think I remember I was either right or wrong. I think I was either very right or very wrong with this. I know that price came up because I took a short from up here, and I'll show you that in a minute. And hopefully I can just screenshot my broker feed as well to show you that I did take the trade. But the first target was essentially a weekly rebalance. All right, so just gonna mark on here if I've got it. Yeah, weekly rebalance on there. That would be, you know, target 1 if I'm looking to go long, because we're just coming out of a weekly, you know, there's a daily, we're just coming out of a weekly order block as well. We tapped the daily at the end of last week. Obvious signs say if we get chock now, we should work our way up to the next weekly and probably daily, because the daily respects the daily and the weekly. It doesn't respect the H4 and so on and so forth. So, you know, if you're taking trades off of 15, don't expect it to respond to a time frame lower than it. So if you're trading the 15, don't look at M1s and think, oh, that's going to be the reversal in the market, because it doesn't care. You know, the market respects time frames above it. You know, so weekly, we're still going down. We're technically going down. This was the leg, okay? So that was the weekly leg. We're working down. We haven't got chock yet. Or have we? We almost did. We got this broker structure here, but it was only with a wick. So this being the chock line, the previous weekly chock line, the structure is that technically this is a pullback for chock. If we'd have got a body break above this candle here, by the way, on the weekly, so, you know, if we'd have closed a candle up there, there's no doubt that the market would have still come down, grab liquidity, and then work our way up. But we just didn't get the body break which we required. Instead, we actually came up and got involved in this order here, which had already been rebalanced. So, yeah, it was just an interesting move in the market. So anyway, weekly is still down technically, and then we're going to check the daily as well. All right, so looking at the daily, very strong sell-off last week. Apart from when we bounced off the weekly rebalance, we got a pullback for a day, and then we got a tap down and then a rejection. Okay, so there was a little bit of confusion at the start of the week on the weekly call with FTR. So every Sunday night I go through for an hour or two, just a breakdown, like a market analysis, what we're expecting, where all the order blocks are, where we're going to be targeting, if we could get into a trade on Sunday night, which is my favorite time to trade, and go from there really. But there was a little bit of confusion because of this, pattern. We were bouncing off key areas, but I didn't know whether or not to take it seriously because of the size of this sell-off. Although there's a lot of imbalance left behind here, leaving a genuine order block on the daily. Okay, so bear that in mind. But technically speaking, because we had got chock right there on the day, we're still technically down until, let me see where the low is on these, 586. I'm just checking those numbers up here, by the way. So I'm just checking the low of that. So 7586, 7550. So no, we didn't get a pullback. Oh, there we go. I could have just zoomed in. Didn't get a pullback. So technically speaking, yeah, we're still working our way down. So daily is still down. If we're going to get a reversal, or if we're going to be looking to take longs, we're going to have to see reversal patterns on the M15, which would give us our first kind of signal, then a confirmation preferably on the H4 before we start really looking to take longs. But we don't want to take longs targeting dailies and stuff like that if we can help it. We just need to start looking at taking profit as soon as we can, pretty much, just to be safe in the market. You don't want to be trading counter trend to the higher time frame. Okay, so there's the weekly, daily, and H4, but H4 really works well with the weekly. So if we get chock on the H4, we should ideally target the weekly. All right, so the weekly is not too far away from current price, but I don't think that there's anything really left behind. This is still the same markups as the last few weeks with this strategy. Like you can figure out months in advance, literally months in advance, where price is going to be bouncing. It's got to be the best strategy on the internet. Well, I wouldn't know, but generally speaking, it works well for me and everyone else in the group, or most of them. So H4, let's have a look at what we've got. Right, time to start marking things up and using these things. All right, so I'm just going to get H4 boss and H4 chock. I tend not to use these in my live trading anymore because they just kind of get in the way. I just put them for markers for people. But if we're going to get H4 chock, which means our trend direction, we need to get a break of that. And if we're going to get a continuation, we need to get a break of that. All right, so we want to see price go up, break above here, and then work its way down for us to continue downwards. But there's another, there's a point of interest, on the daily over here, not an order block. There's nothing solid down there for the, for the H4. And for the weekly, it's this whole area. There's another daily as well. So bit of a tricky area. Lots of demand came into the market here. I couldn't find anything solid to bounce off, but it did. It bounced off something which I wasn't expecting, to be honest with you. So, and then working it up, there's not really anything solid at all. Okay, so all of this was a very, very well balanced market. I would expect, boom, price to just shoot up through here. But there's so much liquidity underneath us as well, until we get down to here. And then after that, maybe just this little bit here. And then I think it's just a monumental drop. Okay, so it's fairly easy to figure out where the market's going to be going, or most likely going to be going, once you understand supply and demand, liquidity, and the balancing of a market. Okay, so that's probably the three most important things. And then you use, man-made stuff like structure. It's a bit like using trend lines. The structure is less subjective. Trend lines are very subjective. And I try to be as least subjective as possible. Even though I've got experience with price action, I can read that extremely well, probably in the top 1% for price action. I want to try and be very unbiased for when it comes to actual structure itself. You got to put other factors into account, such as liquidity grabs, direction of the market, overall direction, order flow, etc., etc. So there's actually quite a lot to balance, but once you do go through all of these elements, it will make you so much more of a well-rounded trader. It becomes just very unstressful trading because you just have complete confidence in your ability, which I'm really starting to see in my accounts now, which is really good. And with life changing a little bit for the better for the last few weeks, I don't think I could be too much better or too much happy with the results that I'm getting. So, you know, H4 is still technically down, just to summarize that. And there's not really much to go off. I don't really want to mark up any order blocks as it stands, like that I can't see any. The only thing I could think of is potentially that, but I can't from memory remember where we've actually bounced off, but I am aware of that imbalance right there before the daily. So let's just drop down to the 15 and get started. All right, so a wee bit of a ramble right there. I hope you get used to my rambling. I'll try to talk very on topic, but these videos tend to take about an hour per week of backtesting. This is more data gathering, to be fair, and it's just for my ASR. So I do like an advanced self-review every week. I try to do them every day, but I don't always do it. But I need to see what else there was in the market other than what I just picked up. Okay, so I pulled out of the market this week, only about 7% out of the market, but I'm pretty certain that it gave back a lot more. Actually, I know that it gave back a lot more because there are a couple of trades that I didn't take, which I wish I had if I didn't hold on to my bias. Okay, so I'm just going to call out the ones. There's two right at the very start. There was one which I called out at the end of last week's video, which was ready to set up for this week, and it worked to an extent, and it was this one. All right, so there was a sell off of here, which was going there, and if you're unaware, I add 0.5 pips to all of my entries now, because a lot of you guys use prop firms which have diabolical spreads most of the time, at least my experience. And I was only going to target the break of this low, really, 4.47. You know, it would make sense for us to target the next area, which would be down here, but I couldn't make too much sense of all the rubbish over there. All right, so at bare minimum, really, I want to be trying to get 4R. I've got better than a 25% win rate, and the reason for the 25% was if you take all order blocks and all points of interest. But I've obviously refined my strategy because I don't want to be taking everything. I want to be taking things which have a slightly higher percentage chance of winning, even though it impacts my overall risk-reward ratio, like takeout from the market. I still don't like having massive losing streaks. I still prefer a little bit more balance with that. And that's just something which is going to improve as I improve as a trader and get more experienced. So here was another one. Okay, so I called this out in the group. I put it into the group and said, there's two trades here. They're both 50-50. And when I say 50-50, it just means, you know, one of them is most likely, you know, not stronger than the other. There's a lot of confluences in favor for both. It could go either way, but I tried sticking to my guns at this point. Okay, so a bit of a preview giveaway. I said that I'm continuing with my bearish momentum. Everything's going down, everything's working down. This news candle, I even said to somebody in a YouTube channel, YouTube comment, that I charge towards the wick every time with a news candle. This is the one time where I'm proving that I actually got it wrong. Okay, so I always charge into the wick, and I always do extremely well from it. On this occasion, it didn't work out for me. I took the trade short. I didn't take the trade long. Okay, I should have taken the trade long. First target was initially here, just a breaker structure on the H4, but then the next target I actually targeted. It was the liquidity only on the M15 though, and I have a feeling it was right here. So it would have been a rebalance of that because I couldn't find anything else which was untouched until we get up to literally this next area. So in the mind of safety, you know, I obviously want to get chock initially. And because this would be classed as the extreme, okay, because it's the extreme, there's absolutely no point in just targeting the break of this structure. If you're going to get chock, all what it means is that, you know, on the H4 is going to look like this. It's going to come up, break that, it's going to come down, and it's going to grab from the deepest order block that's possible. Now, if we already tap into this, that's not going to be the deepest order block, all right? That's going to be a previous deepest. It's going to come back down to something like this and then take off even further. So if you can take a huge profit with this one and then get in on the pullback of another one, happy days. You've just got 2 trades out of the same, pretty much the same move, same reversal. But my target initially, I'm just going to use this tool to help us mark out where it is, was, I think it was that. Because it was 20 odd, it was 20 something, 24 I think. There we go, 20, yeah, that's about that, 23. So that was my target. All right, I'll just take that off to stop the confusion. But that was my initial target. And then the secondary target, which I think I did call out in the video within the group, is actually up here. And it was a 40R trade. Now, bear in mind, this week was absolutely horrendous for red news, okay? Look at all these events down here. Something just to be aware of. These are only like, these are like the major ones. There were loads of sort of like middle / major, market movers, let's say. There were loads all the way throughout the week. There must have been 50 red news events. Yeah, about 50. So we were very aware of, right, we've got to, if we can, exit the trades just before the red news. If we're miles away from our stop loss, then yeah, fine, keep in the trade if you want to. But you might be stomaching or having to stomach a loss of 10R or 12R on what you were at, or you might get lucky. But I prefer just to bank what I can. I'm getting less greedy as time goes on, which is a good thing. So it's all stages of development for traders, I think. What's this weekly thing? Ah, right, yeah. So my weekly areas don't show up when I'm on the 15, but on the H4 they do. See, so I've just used a setting on there, which I only found out recently you can do. They're the settings which I use, but I can't see them when I'm looking at the 15-minute. Otherwise, it would just be way too cluttered. My chart would constantly be blue, and I don't like it as a blue chart color. So it disappears on the 15-minute, which is helpful. So anyway, let's just get cracking. All right, I'm going to try to speed up some of this price action. There we go. When did I get that tag? Monday, I don't know, Monday morning at some point. So I got tagged in. Me being me, took a screenshot when price was about there, stuck it on Instagram, said there we go. There's an old month's salary in a few hours, maybe like 2 hours, and then we know how that goes when you get cocky. So what had happened here as well is that price did come down and tapped us into this. So I said to everybody that I was going short, said to everybody in my group that we're going short, and I said I'm not going long, but I believe that a few people did, and I'm glad that they did, because what a week they've had. Anyway, this happened. I felt a little bit gutted. I could see this forming. Okay, so on the 15-minute, okay, just to explain this, on the 15-minute, your chalk line is here. Oops. Chalk line's there. You don't necessarily have to wait for chalk, but you could enter on a different order block down here if price goes up and pulls back down. But at the end of the day, we have had an entry on the 15-minute in a very precarious area. Okay, I wouldn't just be placing trades left, right, and center, going counter trend anywhere on the chart. It's the fact that we've bounced off a couple of key zones. Okay, we had the initial bounce off the weekly, we've had the bounce off the daily, we've had this reversal pattern forming. Okay, there's a reversal pattern forming here. It's giving kind of like half the vibes that price is actually going to bounce up. But we've also got the previous vibes that price is going to press down. So I was happy that I was in the short, and I was happy that I'd take 4.5% if it comes in for me. And I was up about, I don't know, 2.5%, 3% at this point. But I walked away from the charts around here for the rest of the day. I've had a very busy week personal life wise, so it's fine. I just did what I could, and then see what happened. Oh, by the way, there was a bit of price action which I noticed, which I was a bit frustrated with. These inside bars, all right, let's look really closely. I use the inside bar, that's why they're highlighted. But these inside bars can be classed as highs and lows within themselves, all right? So technically speaking, you could say that your chalk had occurred right here, because it's the highest inside bar, got it with a body break, price came back down, therefore your new order block would actually be off of that candle right there. Therefore, you'd have got another entry right there if you missed this one. And that stop loss would have been, let's have a look, nearly the same size as this one, about that. So another chance to get 20R right there. 23, that first one, another chance to get 20R. Really frustrating. Obviously, I didn't see it at the time. But the market just keeps on giving, honestly. Like, as soon as you get your head around this stuff, you'll be flying. And again, we get internal shock occur, which is good. So internals, you know, another sign that it's going to happen for you. There we go. We now get chock. We're on the way to the races. We've also got another order block right here, which is formed, which I think I did mark out on the charts. So we've got another one there to get long from. I don't think it came back for this one. One, two, three, four, five. And then we'll just keep going for a little bit. Now, a lot of people will be saying, why didn't you take that short, or, you know, take anything from here? And the reason being is that we haven't had a break of structure. We haven't had a break of this. We haven't had a break of that. You know, a lot of what's going on here is that we were stuck between this range and that range right there. And there was a little bit of debate of this being like sort of like a semi-significant swing within the H4, so on the 15-minute, and then obviously a break of this. But I didn't want to scale in at this stage because I was already in the trade, and it wasn't looking good because we had reacted to the other order block, which I'd pointed out, which would be classed as the extreme for the H4, and I think the daily, I can't remember off the top of my head, but it was definitely going to be the extreme. So at this point, I was kind of kicking myself because obviously if we do this, you know, it's already 4.23. This one's like 0.5 at that point, but I did stick to my guns. I held the trade throughout. Maybe I was a little bit silly too, but it's always the times when I decide to close my trade or bring in my stop loss where it goes wrong. I always say don't touch your stop loss regardless, because price will quite often come back and check it. So just don't. There was another trade here, you know, early in the morning, 2:30 in the morning, we got chock pressing down. There's another one right there. So I'll mark that up on the chart. It's only on the 15, but this would be, you know, right now classed as extremely risky if you were to take it. But we'll put this on just to show you. And target, you know, initial target really just to break the swing of this area. And then obviously you can press down and go where this one's going to go, and it's most likely going to head down to that. So just bear in mind, you know, you can have, you know, 1, 2, 3, even 4 take profits with a lot of these trades, and there's no reason why you can't get them. The strategy shows week in, week out, quite often, you know, most days that you can do this. Just bear in mind that you're going to have to eat up a lot of losses while you're learning which order blocks are the best order blocks to take and why, more than anything. So I'm trying to come up with names of how to categorize these order blocks, because some are better than others. But at the moment, I just use extreme, mid-range, and EQ. There's probably, and pre-boss. So 4 types of order blocks or 4 types of pullbacks at the moment, but I'll probably give them names. I don't want to sound all markety and gimmicky and stuff like that with trading, because I really dislike that in the industry. But I understand that, you know, my stuff is slightly different to what is out there. Therefore, I'm probably going to have to name it so people know what it is I'm talking about. But anyway, let's get our first loss on the board. So there's a loss. This one's still going. That one's not entered. Let's just separate it out a little bit. And let's just start charging into the market. Okay. So price was working its way up quite nicely on Tuesday. You know, all the areas which we were thinking it might bounce off, it had some kind of reaction to, very, very minor. But, you know, I'd said at this point my bias has changed. Oh yeah, and we got a loss there as well. So my trade, which I was in, I took a full loss on it. Is that inexperience on my part? No, that is experience, because as I said before, every time I move my stop loss to break even, it comes back in. taps it and off we go. And the reason for that is you usually leave behind an order block. So price wants to come back, tap that, and then charge off with severe aggression. And it's just a lesson to be learned. So I was fine taking that loss, no problem. I only took 2 trades this week, just so you're aware, and that was one of them. So let's keep on going. We had a news event, was it CPI on Tuesday? Yeah, core inflation rate. Okay, so red news, everybody get out the market. So anybody who was going long would be thinking potentially to get out the market. We were looking for areas of liquidity, all right? So with red news like this, if you're not already in a trade, which is, you know, miles off in the distance, we were expecting this move to be about 50 pips. Now, if you look at the range of the move, it ended up being 43. If you count that as well as part of the actual news, it's about 55-ish pips, depending on your broker. Also, there will be slippage here, so call it 60 pips. Now, if it was 60 pips which just went in one direction, 60 would take you back to pretty much break even, all right? You would have been safe to hold this trade, but if you were looking to get involved with any of these, just don't. You know, you need to check and see what size these red news events are going to be. We knew that there was an order block here, there was one there, there was one there. Is it worth doing with CPI? No. You're an idiot if you take them. You know, don't trade the news, trade the reaction. I've got 2 news strategies. I know how to trade the red news. I can do it successfully, I can do it profitably. Will my funding account allow me to do it? No. Can I do it with my personal account? Yes. You can trade the red news events, but just don't try to predict the red news event, all right? It's very obvious what it's gonna do, you know, just before the red news happens, but just don't. If you don't know what you're doing, don't do it. You know, there's enough videos on YouTube of clowns trying to trade it and they just blow their account. You know, 6 months of hard work for the majority of strategies and they lose it trying to show off on YouTube. And I feel bad for them because they're genuinely upset. And it's not nice to see people like that, but you just got to be serious with yourself. Don't do it. There was a 1 minute. Now I haven't been trading the 1 minute, but I just want to show you here. There was a reaction point on here where I said there's very possibly an order block right there to get short from. And why that one in particular? It's shaped like an M15 order block. It's the size of an M15 order block. All right, so you know it's like 10 pips, but it was also off the H4 line. All right, so the previous line. So I said there is an order block right there on the 1 minute if anybody wants to take it. I didn't. I don't trade the 1 minute anymore. Not lately. So I'm trying to stick to just the 15 and the H4. And trust me when I say this, life has got a lot easier. It's less stressful sticking to just the 2/3 timeframes, but just taking my entries off the M15 and not going any lower. I have checked, the 5 minute and 1 minute to check other people's charts when they've asked, is this a valid trade? Of course, I'll help them out anytime that I can. But for my personal trading, I'm just sticking to the 15 because, the strategy, like you can see just the thumbnails of the previous videos that I've been doing. Like if you're not happy with 20% availability in a week for a strategy, trading's not for you. I'll just be blunt about it. Trading's not for you. Getting 5% in a week is phenomenal for any industry. And if that's not good enough for you, trading is not for you. Go gamble at a casino, because you're on the road to it's the wrong mindset. Okay, so anyway, there was a 1 minute there. I don't remember if it actually came up to take it, but we weren't sure on the direction at the moment because we'd just been stuck in this giant range for ages. We just technically extended the range to up there, but I don't like to move my original line because it quite often plays a role in this new kind of range again. So technically now the range is like down here to up there. You also bear in mind that this immediate leg is just this, it's the news reaction, and we weren't really sure what to do. It was a case of, can we potentially start looking to go long? Because we did push up, but monumental push down. And what did we react from? It was actually another order block. Yeah, I thought it was a reaction from that. Did we get it? Or did we break past it? Sorry, I might have that wrong. No, we did. Yeah, we reacted from that inside bar, and it's a pre-boss inside bar. I think I did have it marked up last week, but I took it off because it was, one, it was unmitigated, and two, it was doji shaped. I'm not really a fan of dojis. They're good, but when they've got wicks that size, I don't really like them. But anyway, again, it was a little bit too close to price action to actually take for a red news event, so wouldn't take it anyway. But it was just interesting to see. Price went up to that one. It came down to one of the deeper, more obvious order blocks, which has been unmitigated. It's got a swing on the very last candle. Just log all of this information into your journals, because over time, you'll start getting weary of certain things. You'll start getting really positive feelings about certain areas. But we knew that that was available. We knew that was available, even though it's mitigated, so you just take the inside bar. That one was available, but way too close to the action. Yeah. Anyway, I'll try to stop rambling, because we had the potential to be on Thursday by now. It's Wednesday midnight, so let's keep going. Nothing to do, still just in this giant range. And it was looking like just a really quiet week, because we had to be mindful of all of this, all this red news. We had FOMC, we had the Fed interest rate decision, we had the press conference, and we also had PPI. So there was loads going on. So in reality, we just had to sit on our hands and wait. And there's nothing wrong with that as well. I know the temptation, by the way, because I've been there. I know the temptation to wake up, walk through to your computer, go, right, okay, I'm going to have to get a trade away today, because that's all how I'm going to make money. And it's like, well, yeah, but it's also how you're going to lose money if you're ill prepared. If you've got an edge in the market, which we clearly have an edge, the last thing you want to do is bleed your edge away. It's a bit inexperienced to do so. I was going to say it's amateurish, but I still make the mistake. I still get FOMO. I won't lie. I'm not a perfect trader. I certainly know how to trade. I certainly know a strategy which absolutely destroys, I think, everything I've ever seen. But I'm still inexperienced in comparison to those who have worked on Wall Street and stuff like that, for example. But in terms of my actual trading experience, I think I outstripped the majority. There's kind of one there, but obviously the flow of the market's going in the wrong direction. It looked good. I think it may have been called out, and I was like, no, we haven't had chock or anything, and we're now technically going up. But on the higher time frame, on the H4, and I've just realised I haven't been jumping to the H4 to show you guys. Let's see if I can. But I can't, because that won't even reveal itself. But anyway, danger move. Don't try and short from that. We're showing signs of reversal now. Obviously, big news event coming up, 7 o'clock, 7:30. Just, if you're in the market, exit, because that. Look at that. Finally, we get the breakout of the zone. If we weren't convinced by that, we are now. So let's see if we can. We're going to move. Oh, I can't technically move it yet because we haven't had the close of the H4. So that still stays in its place for the time being. We have a new 15-minute order block all the way down here. Not the best. I don't like the news ones. They do sometimes hold, but I'm not a major fan of them. Price continued working its way up. What time is it? I'll try to check the H4 before we move across to 10 o'clock. And I'll check the daily as well, just to see how it's shifted. We finally pulled back away from something else. Price did on that news event, by the way. So I just want to point out how accurate this is, what we do. Oops. So that was a push up before we got a push down, all right? So class these two candles as the same candle. The reason for that is there was no give, all right? Just literally blend the two together. There's no pullback. Go up to this candle before we got a minor pullback. Now, this move was not mitigated previously. It was our area of supply coming into the market, which we were targeting for the liquidity of that move. Okay, so that move, obviously you would have closed out around here, or at least around there before that red news event. But if they hadn't have happened, this would have been a 23-hour trade. All right, but we will tally that up at the end, and we'll be realistic with where we take the percentage from. But our target was there, which was the base of the liquidity. The liquidity ran up to here, But because it is now technically counter trend to the H4, because the H4 had broken with clear momentum, a little bit like, you know, right at the start where I was going, you know, this is what we do, it's zone to zone, and the market just goes like this, and then we get a change of direction, and then we target the next one. You know, it's just doing that. It's just doing it on repeat over and over and over. And because we had a change of direction, which was on the H4, everything which was left behind before, even though, you know, if it was still going in the same direction and it was going to be pro trend, this sort of thing would hold most of the time. But because we're now going counter trend to the higher time frame, get out the market, man. It's just going to be a little reaction point. And look what happened. Straight away, the next candle, it came down. Everyone thought, oh, I've just found the turn because I've just found liquidity. You know, these are all the SMC traders going wrong because they, well, I won't slate them. You know, we're all beginners at some point, but market just went straight through it. All right, so this, if you know, had the balls or the lack of common sense to still be in this trade, you'd have taken profit right there anyway. But I'd have been out. If I was in it, I'd have been out there. About half an hour before the red news, if you can get it. 15 minutes before the red news, latest. But the market starts doing its thing about 15 minutes before, and you can normally predict what direction the news is going to go in, you know, with a fair degree of accuracy. But you wouldn't bet your house on it, which is what you're doing if you are actually betting on the red news. So anyway, let's keep going. There's nothing really to take, nothing really to mark up, quite boring, just a very analytical week. You just have to be very aware of what's going on. Now it's just a case of literally just trying to find, is there anything to get involved with until we get up to the next zone? Is there another zone up here before we, was there a weekly that I'd marked up? If there was, it would be here, I think. That would be the, I want to say that would be the weekly. But no, daily, yeah, that's a daily. So the target would be up here anyway. So, you know, the market's made it clear. It's made its intentions clear. Yes, we're going up in a slow channel. You can start thinking, right, okay, from a price action perspective, price has pushed up, it's pulled down. We're now, you know, slow momentum, but look at the time. Look at the time down here. Slow momentum, but it's spread hours. You know, it's the Asia session, it's going to be slowing. What side are the wicks on? The wicks are on the top side. They're on the bottom side there, top side. It's still showing sort of like 50-50 momentum. It could be a push up, channel push up, and that's generally speaking what it looked like it was doing at this moment in time. So anyway, let's just keep on charging through. There was a potential to get short up here, but again, going counter trend and just using the inside bar as a kind of like a pre-warning. So if you do that, okay, so this is a internal trade. I think it's like internal times 2, so 2 levels of internal. So I won't include this in the results, but I will literally just show you what the trade is. Bear in mind, it's really, really small and pointless. $3.3, I wouldn't even take it. I'd have to make sure that it's at the halfway point to manipulate it slightly to make sure that the figures actually work, because if you miss out on a trade, well, who cares, because it's not really part of your plan. There you go, make it a 5.8, but that's what one of the trades would be. Even though we've not had chock on the 15 minute, we certainly haven't had it on the H4 because it's all the way down. Oh, it'll be up here now, but you know, that would be an internal trade. It's hard to explain. I've got a module on it. So anyway, there we go, job done. You'd have taken profit. I didn't take it. So I'll take that off, but it was interesting for you to see. I called it out in the group, but I wasn't interested in taking it because I'm trying to stick to pro trend only because it's just stress-free trading. But I knew it was there, and it's like kind of, well, the FOMO in me and the rookie trader was annoyed. But the real trader in me was pleased with myself that I stuck to my guns. All right, so it's just the development of your trading. It happens over time. Then we got that, a little bit of a push up. Again, all these were rebalanced. Yes, it's a valid area. Yes, it was marked up. I didn't take a long from there. If you did, it would be go from long to there, or from there to there. But For me, it was rebalanced. It didn't quite fit with my plan. It kind of did, but the pre-boss was actually this, and it still didn't look good to me. So, wasn't that fussed on it. And if I had taken it, would have taken profit, which, is absolutely fine. I did drop down to the 5 minute to see if there was anything down here, and there was. I think it was down here. It looked really good, but it was only the wick of this. But I obviously don't have it marked up on here because we're only actually looking at the 15 minute with this. And all what we're doing is we're continuing with the momentum of this. Now there was one which, so I just mentioned about this one being rebalanced and then pushing on. And then there's this one, okay? This has rebalanced, but I still have this, I think I've still got this one marked out on my chart. I don't have a pending order off of it, I don't think I have, but this was one which I did want, but it sounds like the rules are very similar to this one. Difference is that, look at this, look at the aggression coming out of it. Yes, we've rebalanced. No, we haven't mitigated it, we've only rebalanced it. This one was only rebalanced, it wasn't mitigated, but it wasn't the pre-boss trade, okay? And this, as an order block, was a little bit more messy. This is quite clear, okay? Look at that black candle by itself, and then the aggressive white candle. Look at that, it's a black candle, aggressive white candle, but it just had a little bit of a mess between it. This was a downtrend turned into an uptrend, all right, just short term. So a little bit stronger for me. I prefer this order block, all right? So there's a long that can be taken from there. And wherever the high gets to, that will likely be the target. There was another one, I think it was that called out in the group. And I said, no, I'm not interested in it, but I think that price did bounce from it. But it just wasn't strong enough for me. Like, yes, the market curved. Yes, we had a clear sweep below here, and we also mitigated this sort of like pre-boss, pre-chop, whatever you want to call it, candle. Maybe it was a missed opportunity for me, but I wasn't that fussed on it. Again, just tried to go with stress-free trading this week. Got another one here, which you wouldn't take. So, oh, and there we go. And price literally came down. So I'll show you. Like, if you'd have taken this, I hope that the guy in FTR did take it, because look at that. And then you'd have smacked your take profit as well. So the actual trade was this. Just sort of more taking you through what I took, what I was going to take. But there was this available. Is it valid? Of course it's valid, it's pre-boss. It's pre-boss, it's the last swing. So technically it's a valid trade, and we'll stick that in. I wasn't going to, but I didn't like it, but it is part of the actual strategy, so we'll stick it in. 6.67, sorry, 6.72, 6.67. So we got that. There's still this one, which would technically be counter trend if we have to get into it, but we'll see how price reacts to it. And where are these order blocks? So we've got an H4 over there from the past. Let me see what the time is. Okay, so we're Thursday, perfect time where we can check the H4, I think. Okay, we didn't see that. Let's go back one more. There we are. So we had an H4 there, which I wasn't too sure about. And there was potentially, I don't know, maybe that. No, I don't know. Not a major fan of it, but we got the daily up here anyway, which is what we were targeting. Got the H4. I think it's fine. Let's go. So what we're looking for here, by the way, so this is a very small H4, considering these are the M15s. We've got a relatively small daily as well, 55 pips. We're looking for chock. We're looking for chock, or we're looking for boss. All right, so if we got boss, it'd be that. Or if we're looking for chock, we'd be looking for that, and to get short. Now, I will update my H4s, because just to let you know, there's a few trades coming up. I need to go back again. Don't want to reveal everything. Right, so that's where we got to. Okay, so we do have an H4 left behind, just an area of demand. Not particularly great, but it's going to be valid at some point. So H4, there's potential H4 right here as well. So continuation trade straight off of that, which you could do, or be aware of it at least. And I want to check the daily. I'm going to go back to here and check the daily quickly, and then we'll jump forward again. All right, so look at this daily, by the way. The aggression coming back into the market. I think I counted the pips, and it was only kind of this candle, potentially that one, which were bigger, you know, full range from low to high, going bullish than what we've had in months. Okay, so it was looking good. H4, we'll go forward a couple of candles because I think we're up to there, weren't we? About that. Then we'll drop down to the M15. Yeah, okay, right, we're back with our new zones marked up once we got into here. But I didn't care what the market was going to do. It was just a case of trade it as is, as when. I hadn't noticed any of this, but we'll keep on going. So we've got boss occurring again. I'm pretty sure that we reacted to an M15. Okay, I had an M15 on my chart marked up. I don't want to do you guys an injustice here. Yeah, the smallest of small M15s. I wasn't that fussed on it, but pretty certain I had something around here. Don't know. Right, anyway. Let's keep going. So I was looking at the chart around about this time, and I was moving my M15, so I got my M15 back on here, M15 shock, and I was following it. So I was looking for that, looking for this. If there was going to be another pullback, another break, I was looking for that. And the reason why I'm looking primarily for chock in these areas is that we're in a higher time frame zone. We just broke out on H4. We had a very minor, ridiculous reaction off of that. We were reacting a little bit from M15s, like these are all little M15 reactions. But because we're in a POI, I'm looking for a reversal until we get the breakout. So I'm not necessarily looking to take a long off of here. There was a long that you could take off of this pretty much, but I think price was telling us to do otherwise. I did draw it on, so there was a trade. So technically I missed a trade this week. But this is a valid trade and you would take it, because look at this as an order block. So you've got this as an inside bar, and I quite often take inside bars, especially on a rally, but this candle did not break that wick, so it wasn't like a momentum and then a drop back and then more momentum. It was starting to slow. The market was showing signs that it's going to slow. Again, we got that channel feeding in. This is in the middle of the day, so this is New York session, so it's showing you that it is running out of steam, or potentially running out of steam. And then the target of this is going to be, because it's going to be counter trend, because, oh, sorry, I've taken it off again, but chock being there, this would be counter trend on the M15. You only want to feed into the next area of supply on the M15 before you take the highs. So anyway, huge liquidity, imbalance right here. It solid, super solid. All right, bear that in mind. It would only be a small trade anyway. We got chock right there, which is good. And new order block right here. And the trade, go on right there. 1, 2, 3, 4, 5. Now you can say the initial target is down here, which is, absolutely fine. It's a rebalance to certain bits and pieces. I think that my trade was initially just going to be this 7.95-ish, because I was paying attention to that as a swing point. But then I switched it, changed my mind, and I'm pretty sure I was targeting down here actually. It wasn't that one. I wanted to get into this zone. I think it was there. Let me double check this. I'm going to check the time frame, 6:45. So I'm going to go back a couple. So H4. It needs to make sense on the H4. No, it was a rebalance. Yeah, so rebalance to the H4, but I was actually taking that. So the initial thing which I was aware of us trying to get past, okay, was this. So like the initial actual rebalance, but then after we get past the rest of it, so you'd expect a bit of a bounce, a bit of a reaction, a bit of a pullback, possibly a chance to scale in or get in again if you miss something off of this initial rebalance. But all of this imbalance below here, it makes sense that the market's going to come down and close up to at least the next one, okay, which I think is that, rather than the technical rebalance, which is this, because this is an order block. All right, so it's kind of hard to explain on a quick, hour-long YouTube video, but there's plenty within the forum on this. So these are the targets. Get through this, you should be okay. Get through that. Still don't move to break even, but you should be okay. Get through that. It's cool. Time to target this one. But I'll show you where I got in and got out. Because, yeah, preview. Anyway, let's get going. So this trade now gets put on. Something that I'm trying to get better at is I switched my bias here. This is a very, very solid trade that you could take, but the target is actually only going to be to here, or it could even be to there. But it's just not a good enough risk reward ratio. You would need to, pretty much go to that. So it just doesn't quite fit the plan. And your target, if you could, really kind of target that. Therefore, it would fit the plan. 4.32. It's okay to take it, but for us to take the continuation through, ideally, you want to have a break out of this structure and then get involved in the order blocks. It's not like a written rule, but you'll get a little bit more success from it. So anyway, I didn't place this long. I placed this short, made it quite visible and public in the group. I can't remember if I got tagged before or after spread hours. I think it was after. But anyway, we got just a bounce off the rebalance. Price came back at some point. There we go. We literally got the tap on the button. Then entry. All right, so I entered into the market for my second trade of the week. And what time was that? 4:30 in the morning. And trust me when I say this, I was still awake. Why? Hectic week, and I was playing my PlayStation. So had the chart open on this screen that you can see. I've got a TV over to the right where I've got the PlayStation plugged in, and I just needed to de-stress after the week that I just had. So yeah, I was watching, I was like, okay, I'm in. I didn't have my broker feed open. I didn't want to be watching the money side of things. I just wanted to be watching price action. And the reason why I was happy to take this trade, by the way, is all of this. All right, so let me just try to draw this out. Sort of like tiring push up, aggressive move down, incentivized push up, push down, didn't break this high, push down, bounced off of this order block. Therefore, you've got liquidity underneath these. You've still got that imbalance. There is an incentive to come in and then start selling off. All right, so I was just super keen to take this, wasn't fussed on it at all, and just kind of was posting into the group. Look, there's another entry there. There's another order block left behind. So if you didn't take that, there's another one which you can take. And I was so tempted to scale in, even though it's slightly against my actual rules at the moment, where I'm doing the challenges and doing the funded accounts, but my personal account, I should have placed this trade off of my personal account, just so I could be in the trade. But there was another trade to take off of this. Again, target's going to be in the same place, down here. And yeah, so let's go. Look at that. Look at that. I know there's a news event. But flash news, like who cares? Who cares about flash news? It's never been a big thing in the past. I certainly didn't count it. I was like, I know there was a flash news event. There were about 6 of them. They normally do nothing, but today they did a lot. And don't forget as well, it's Friday. And I always say, beware of the Friday sell-off, okay? The exact same thing happened this time last year, because I remember this date exactly last year because a massive thing happened. And yeah, it was a big sell-off on Friday. There's always a Friday sell-off. Well, not always, but a lot of time there's a Friday sell-off, because if you've had a bit of movement up, you're going to get a big old sell-off down. Okay, it's just the clearing of the charts. But anyway, there was another entry there to take, even better than this one. And it also, again, left behind another order block. So all of these just sort of gradually going on the charts today. But there wasn't much to do throughout the rest of the week because we were so nervous about the big news events, yeah? So it's just a case of being patient. Now, I said that I was playing Assassin's Creed when that came off at 4:30. Well, I stayed awake until about 7, all right? So I was awake until about here-ish. Oh, sorry, I've just moved these M15s out of the way because they'll just be getting confusing now. These are accurate. Okay, so that was the initial rebalance, which I said that we will probably get a reaction from. I woke up, I don't know, about 11 o'clock-ish. I think the price had bounced around here a little bit. Give it a little bit more. Yeah, about there. And I saw that I was in profit about, I don't know, 5 or 6 grand down here. And then I saw a price had pulled back and I was like, what? I'm down to like 4 and a bit. So I don't know why, in my sleepiness, I moved my take profit to about here. Yeah, I moved my take profit. Shouldn't do that. Like, shouldn't do it. I moved my take profit to about there. And watch this. Oh, there you go. Take profit hit. Happy days. I get 4 and a bit % out the market. That's on my Instagram. Like, you can go and have a look if you want. Bye-bye. Why? Why? And it was literally to the micro pip or pipette. Tap me out. I wish I hadn't looked. You know, instead of getting this, what it should have been, I got taken out for 4 and a bit. So my personal trading this week, because I was tired, it was just like, oh, what are you doing? Honestly, what are you doing? Well, maybe I did target further down. I don't know. But anyway, that was the initial, which I went for. But, you know, the take profit on the next zone would have been hit as well. So that last one didn't get entered. This one did. Sorry, let me get this back on the chart. And now there is also left behind. Sorry, very, very weak because of the imbalance above it. But technically speaking, this is an order block. It doesn't look great, but that is an order block. But it is very weak because of what's above. All right, so just bear that in mind. Basically, if you don't understand imbalances, what I'm talking about is there's liquidity above it. So there's an incentive to go past that order block. Order blocks don't hold, like, you know, they don't hold all the time. You know, so don't ever bank on an order block working. Look at what's around it. But it was a fairly decent, you know, not great, because I'd have preferred this black candle to break below this black candle at the very least. But technically that is an order block. But would you actually take it? Probably not, I wouldn't. But if you want to stick to a strategy to gather all the stats and stuff, you would add this to your database, even if you wouldn't actually take it. And then you've got kind of this one as well, as a press down, press up, not good. And we're kind of getting up to current time. It's 10 past 8 at the moment. There we are. Right, and we're kind of working our way down towards this one, which I was kind of like interested in, which I won't be taking because it would be holding over the weekend, but I can almost, I keep saying that phrase, almost guarantee. Next week, guess what trade I'm possibly going to take first? Maybe this one. I'm going to watch how price comes to it. If we don't tap into it before the end of the day, we've only got another hour and 15 minutes. I wouldn't take any trades now, but there's potential for this one. So let's just go through and tally everything up. All right, so we got a couple of winners here in accordance to the strategy. Where is it? Little tick and another little, oh, you know what, let's just copy it and carry it over. Technically there was that one, even though I said that I wasn't going to take it, and I didn't, but other guy in the group did. That one hasn't been hit yet. And then there's this, that one didn't trigger, so we'll just take that off. Yeah, we'll take that off. We'll probably find it again. If price comes back to it in the future, we'll probably find that anyway. And then this one did take profit, but I'm going to be real with where you would take the profit from it, okay? So we could say that we got, what's that, 12R, or you could be targeting, like you do with the rest of the strategy, after you got that initial broker strike. 12 wasn't the target, was it? It was over here. Or maybe it wasn't. No, it was beyond that. It was over here. Sorry, so the initial target would have been that, which was 23, but you should be targeting the next time frame's point of interest, which is actually 40.5. So, you know, but given the red news this week, you would not be doing that. So I'm going to be realistic with you and say, okay, the common sense approach here, okay, so this is where a bit of common sense is required in trading. Half an hour before a red news event, especially something like PPI or CPR, whatever it's called. Where is it? Core inflation rate, all right. CIR, about half an hour before, because the market's going to start dancing around 15 minutes before the news. So 12.15, we're going to add that as, that's a -1, plus 12.15, that's what, plus 10.15. I'm going to get the calculator up. So it was 12.15 minus 2 so far, so that's 10.15 plus 6.72. I don't know whether or not to include this one. Like, it's technically valid. Yeah, I'll add it. It's a minus. -1, like I didn't take it for a reason. I wanted to break out of there just for solid stats on my strategy. And then plus whatever these are, 11.13 and 16.08. $43.08, and I ended up taking like 4.5. Oh my days, I thought I took out more out of the market. So yeah, I ended up taking like just over 10%, maybe 15% of what the market gave me this week. And you know, there were only 3 really decent winners to take, or maybe 4. So there was that one which was very iffy. I wasn't a fan of it, so I didn't take it. Congrats to the guys in the group who did. This one I was watching it live. I actually set it over here, so I really didn't care. It was already set, so I don't have to be at the charts. Oh no, sorry. I marked it up over here, but I reset it at 11 o'clock. So after spread hours, I reset it. So when price was probably, about over here. So it just got tagged in when it got tagged in. And then there was this one, which I didn't do because I didn't want to, get potentially like a -1, but I did when I got a break of this, I think, or possibly even a break of, well, that's the same candle. Somewhere around here, I did move my stop loss to just behind the swing, so I was protecting myself, but there was another trade to take, and I purposefully didn't take it. Just risk management and all that. And then, yeah, I took that, so -1, and I took that. So yeah, technically, I only took like 4.5%. But because I punched out around here, it was just whatever. But I took 2 trades, so I got a 50% win rate, which is fine. Win rate doesn't matter at all with this strategy. I could have got, because what was the result? 43.08. I could have got 40, no, I could have got like 30-ish trades wrong and just taken 1 winner. Problem is that if you miss that winner, you're going to be in a bit of trouble. But, there were 1, 2, 3 losers this week that were legit, and there were 1, 2, 3, 4 winners that you could have taken. So, it was a good week for trading. There was nothing to do for about 2 days apart from just monitor charts. And some of the sort of like beginner traders in the group were getting a bit frustrated because they felt like we were missing out on the moves, but we weren't missing out on anything. We needed to wait until we got into this zone before we could do anything, unless we could latch on to anything, but nothing tagged apart from this one. This was marked out, that one got tagged. Congrats. Anyway, I hope you like it. If you want to join us and you want to trade like me, FTR, links below. Catch you next week.